Welcome to Trade Pro. Due to highly popular demand, I've got the highest profiting strategy shown on my channel so far on the 5-minute time frame, where I'm going to explain the strategy and then test it 100 times in a row so you can see how it performs over a series of trades. So before I get into explaining the whole strategy and showing an example on the bar replay feature, I just want to explain the simple changes I made due to the requests in the comment section. So the first major change that people really wanted to see to the highest profit strategy was bringing it down to the 5-minute time frame instead of having it on the 30-minute. And that's exactly what I'm doing in this video, so many people should be happy about that. And then the next thing was people wanted to see something different than the stochastic indicator for the entry. So for the entry indicator, we're going to be doing the absolute strength histogram on this video. And then another thing was people wanted to see a 2-stage take profit system or a different risk reward ratio. And what I'm going to do is move the stop to break even at 1 times risk and then continue targeting 2 times risk with the whole position. So that way we can minimize on losses where it goes 1 times risk and then turns around and hits the stop. Okay, so those are the changes, and now let's get into the bar replay feature, and I'll do the whole explanation of the indicators values and how the strategy works and show an example. Then the 100 tests will come in a bit. All right, so starting with the indicators, we have on the bottom the absolute strength histogram, and I have the settings on default. Here they are, and the actual author is right here, G-Man-Trading, absolute strength histogram. And then the RSI, and this I have at 14, which is default, and the upper band and lower band removed. We don't need the overbought and oversold zones because we're just using it to find hidden divergence. And then there's the 200 period EMA for the long-term trend direction. So you can only take shorts when price is below the 200 EMA. You can only take longs when price is above the 200 EMA. All right, so now I'm going to explain the full strategy. So the first step is finding hidden divergence. And in this example that I'm going to show on the bar replay feature, it's going to be hidden bearish divergence because we're looking for short positions below the 200 EMA. And essentially, once you find hidden divergence, you're going to just wait for the absolute strength histogram to give you an entry signal, then enter in the direction of the trend. So let's go in and actually identify some hidden divergence, and then I will show you the breakdown of risk reward and stop loss and everything. So I'm just going to start this bar replay feature, and we're looking for a lower high on price, and at the same time we get that lower high, we need to see a higher high on the RSI. So I'll pause it and outline it for you when it occurs. Okay, so I'm going to pause it. We have a lower high on price, so right here, lower high, but on RSI, if you compare this peak right here to this peak over here, RSI makes a higher high while price makes a lower high. That's the hidden divergence that we're looking for, hidden bearish divergence. Okay, so price, if we zoom out, you can see price makes a lower low, makes a lower high, and it makes a new low, and then now it's making a lower high, but at the same time it's making a higher high on the RSI. That's the hidden divergence that we are looking for. Now you need to wait until the absolute strength histogram actually gives the entry signal to go short. So I'm going to play it, and not quite, there it is. Okay, so here's the short signal from the absolute strength histogram, and this one is a kind of a late signal. So this example isn't perfect, but you're not always going to get really early entries with the absolute strength histogram. So the stop loss is going to be placed just above that nearest swing high where you got that hidden divergence and before you got that entry signal. And then you're going to target 1 times the risk, which is where you will move the stop to break even, which after that has occurred, you will then target 2 times risk. So let's just wait. Okay, so at this point, once that 1x risk profit target is hit, you can target 2x risk and move the stop to break even. All right, so this is where we're at now. And I'm just going to kind of play it out here. Takes a bit for the actual second target to be hit, but it does get hit over here. And that's it for the strategy. So this is what I'm going to be testing. I believe that moving the stop to break even at 1x risk will eliminate a few of the losses and it will keep almost all of the winners. So hopefully this method of doing it is superior to the previous test where I did it on the 30-minute time frame with this similar strategy. But on that time, I had the stochastic instead of the absolute strength histogram, but otherwise everything else is the same. So I think it's about time to get into the 100 tests. If you need more information about finding hidden divergence, then you can watch some of my other videos on it, or you can search the thousands of videos there are about finding hidden divergence. But essentially the most simple way to explain it is you're looking for a lower high on price with a higher high on RSI for hidden bearish divergence, or if it's hidden bullish divergence, you're looking for a higher low on price but a lower low on RSI at that same time. Okay, so just do some research on it if you need any assistance. On that last video, I had so many people asking about how to identify it, and I just couldn't answer the same question 100 times. So, do your research on it if you need to know. But let's get into the 100 tests. Let's go. All right, so the results are in after the 100 back tests using the highest profit strategy, but on a 5-minute time frame instead of the 30-minute. And the results aren't nearly as good on the 5-minute test as they were on the 30, but they are still good results. So I'm sure you can make this work. The quality of the hidden divergence signals on the 5-minute time frame just weren't as good. I just didn't like the signals that the hidden divergence was finding. A lot of them were a bit more wonky and more in the choppy ranges. So on the 30, I found it was just a lot smoother, a lot nicer looking setups. So what you could do though is make sure that you're kind of filtering out some of those more wonky, choppy trades if you are going to be trading a strategy like this on the 5-minute time frame. So just something to keep in mind when you are getting down to the lower time frames. It's going to be a bit more wonky. There's going to be more chop. There's going to be more crazy signals coming at you. So just figure out a way to make sure you're looking only for those highest quality, nicest looking setups. Okay. But anyway, let's get into the results here. One last thing I wanted to say is comparing this to the time where I took the classic MACD strategy and tested it on both the 30-minute and the 5-minute, we saw the same thing where the 30-minute time frame test was much better. So it seems as though the 30-minute time frame tests are typically better than the 5-minute time frame tests. So just something to note. But anyway, let's go into the results here. So 2 months of price data for the 100 signals on the 5-minute time frame. It was slightly less than 2 months actually, but this was using the different method for doing the take profit. So at 1 times risk, the stop was moved to break even, and then the entire position was taken off at 2 times risk. So here are the results here: 20 break even trades, so 20 times where it hit that first 1-to-1 risk, and then stop was moved to break even and it got stopped out at break even. Then 37 times it hit both of the targets, so each one of these trades is a winner, and then 43 times it was an outright loss. Okay, so most losses in a row was 5, the most won in a row was 4, and the most break even in a row was 2. So this is where 4 is where it hits both 1 to 2, both targets. This is just the 1-to-1, and 5 in a row with just outright losses in those nasty ranges. So gain on the account was 31%, so it's pretty good. Not a bad test at all. And obviously with some optimizing, you could probably make this thing do pretty well. But personally, I'm more of a fan of it on the 30. So here's kind of a little bit of a breakdown here of how I did the calculation. So, with that 1-to-1 target when the stop is moved to break even, happened 20 times, so it's plus 0 on the account, doesn't change the account value. The 1-to-2 risk reward target was hit 37 times, so that's plus 74% on the account, assuming you risk 1% per trade. So that's 2 times the 37 because you're getting plus 2% on your account each time it's a win. And so plus 74% on your account. And then outright losses, 43, so minus 43%. So 74 minus 43 net is plus 31% gain on the account. Okay, so this was pretty good, and I'm sure you can make it a lot better. I didn't really like the absolute strength histogram as well, so it was giving a lot of really late entries. So I actually liked the stochastic better from the 30-minute time frame test. But then again, the stochastic might also give you issues on a 5-minute time frame, like the hidden divergence was a kind of a bit of a challenge on the 5-minute chart as well. So just some things to take away. I'm sure you can work with it and make something pretty good. Okay, I'll put this up on the spreadsheet and call it a day. All right, so here it is on the spreadsheet compared to the original highest profit strategy with the 62% gain on account, double that of the 5-minute test in this video. So obviously it did a lot worse, but that might not just be due to the 5-minute time frame change. I also believe the absolute strength histogram performs much worse than the stochastic in this case because the entries were just so late that it was having a hard time reaching the 2 times risk profit target, plus the set of price data that was used for this test could have been much more choppy, and I believe that is part of the case for this test as well. Plus, we're using a different method of doing the take profit, so moving that stop to break even at 1 times risk could also alter the results. So, don't take this comparison too seriously. It's really not that scientific of a test, but it is still fun and cool to see, and it just kind of proves the point to you guys that you need to do your testing and do your optimizing, and you're going to eventually get to where you want to be. But anyway, thank you guys for watching. I appreciate all the support, and the channel has been really taken off, so it's really awesome to see that people are interested in this type of stuff. But yeah, anyway, thank you guys so much. Have a fantastic day.